Rakesh Arora from Go India Advisors joins us on the show right now to chat about where the market is headed. Rakesh, hi, morning. And I guess this is what the market is going to do up until we know tomorrow, hopefully, maybe late in the night, or who knows, even 24th morning, what the clear mandate is, whether or not this government continues, with how much majority, details, etc. I guess the market is just going to while away time. Or do you sense that what we saw after the exit polls on Monday was the best that it can get, in whichever case?
Yeah, so 90% probability is already built in of the NDA government coming to power. And obviously tomorrow, as the results starts to pour in, there will be some volatility. So, I don't think that can be ruled out. But having said that, once this big uncertainty is out of the way, there are various issues which market is already dealing with, and those will come back. Obviously, the NBFC crisis that we are seeing is the foremost at the domestic level, and then the trade war, the way it is oscillating at the global level. So these are the two main issues which market is grappling with, and that will decide the course of the course of the market, beyond the election results.
Rakesh, hi there, good morning. Let's talk about individual pockets, and would like to stress a little bit upon the pharma space. In fact, with the kind of earnings that we've seen coming through, Dr. Reddy's disappointment, what Lupin delivered, the expensive valuations, the concerns on the US FDA front, while this does seem to be a fairly lucrative pocket, there are a lot of concerns that consistently crop up, and we have seen a bit of underperformance of late. So what is your take when it comes to the pharma space? Do you have any names in mind?
Well, though I can't take any names, but pharma as a sector has bottomed out, and it has been bouncing at the bottom for quite some time. It was starting to find its feet, but the recent US FDA inspections and the 483s which has come through is slightly higher than what market could digest, and that's why this second round of selling that we have seen in pharma stocks. But valuation wise, things are starting to bottom out, and once there is a recovery in the business, I think these stocks should do well. So while there's no signs of recovery, I would say, but signs of bottoming are already there.
Would you say the same, Rakesh, about consumption as well? Because what began with just an auto slowdown has now trickled into just about every consumer space, even staples as well, getting beleaguered if Q4 earnings were anything to go by. Have they also reached the rock bottom valuation, and is it time to already begin to nibble into some of these sectors too?
Well, see, consumption, I'm not that worried, because it's not really dependent on global issues. It's just domestic issues which can be fixed much faster. And FMCG is something which can't really, remain at low growth for much longer in India, given our demographics. So consumption is a much more safer bet as compared to, say, pharma. I'll just like to also mention that for pharma, there are a lot of companies which are domestically focused. They might do better than the ones which are focused on the US at the moment. So I would say, given the uncertainty, trade war, it is better to remain, with sectors which are domestically focused, and consumption is definitely one of those.
What about auto then, given that valuations, you mentioned FMCG and consumption, but we didn't talk about auto. So, all right, we've already covered auto then. Let's just talk about some of the other pockets of the market that you're looking at as well, Rakesh. And where do you find valuations cheap? That's really what I was going to talk about, even with the auto pack. Where are valuations, according to you, in this market looking attractive, whether it be in the broader markets, whether it be within that financial basket that everyone seems to favor? Where is an attractive bet?
Well, see, India was never a cheap market, and I don't think it will be cheap ever, hopefully. But there are a few pockets which are domestically focused and can benefit from the new government and are looking really attractive. One is the infrastructure EPC space. Most of these stocks have corrected quite massively, between 30 to 50%, and most of them are sitting on decent order books. Their execution has slowed down because of bank funding availability, or they bid into HAM projects which are taking time for closure. But I think infra is one space, whichever government comes in, it can't be ignored, and some of the infra EPC companies are starting to look good. Also remember that we are seeing some green shoots on the investment cycle possibly picking up in the next 12 to 18 months. So that could also be a tailwind for this sector. Apart from this, I think utilities haven't really done much, and if the economic growth picks up, I think they would continue to do well. And we are in for a prolonged period of low interest rate, both globally and hopefully domestically. So utilities with their stable returns could be one of the sectors people can look at. But apart from these, I think you have to go back to banks and consumption, which have been the mainstay of Indian markets. Probably there one can look at PSU banks, the large ones, because the NPA problems are now behind us, and given the turmoil which is happening in NBFCs, maybe PSU banks might reclaim some of their lost market share. So these are the three places where there's some value, I would say. But overall, markets are never cheap, and that's a good sign, I would say.
I want to look at the broader end of the market right now. The mid-cap index is down over 100 points. The Nifty is just laying low, taking it easy in trade today, tottering around the 11,740 mark. Just pull up some names. DHFL continues to bleed, and rightly so, after the big headline this morning at 114. There's Jindal Steel, which is down nearly 11% in trade today. VA Tech is looking very tempered. M&M Financial, another casualty. IDFC First, PNB, Torrent Pharma, Jubilant Life, something like PVR, Lakshmi Vilas Bank are some of the other names that are under a bit of pressure. While on the upside, pull up Timken India, 20% on that stock at 671. JB Chemicals is up nearly 7%, and Jet Airways continues to cruise through 7% higher in today's trading session. Those are some of the movers in trade today. What's going on with the OMC basket now that most of the numbers are out of the way? HPCL is holding out in the green. And Rakesh, wanted to get in your thoughts within this space itself. In terms of the results that have panned out, you've seen the marketing segment, which has done fairly well, but refining has continued to remain a bit of a drag. What is the outlook on the overall fundamental picture, and particularly earnings, when it comes to OMCs?
See, OMCs are doing reasonably okay, I would say, because government has not really interfered with their marketing margins, which was one of the fears when crude prices started to move up. And since now elections are out of the way, I think that worry should be permanently off the table. Number two is that, with crude prices going up, the working capital needs do go up for AMCs, and so that's a bit of negative. So overall, I would say that they will track the market movement. I don't see a major rally building up, but yeah, they will be moving in line with market.
Okay, so that's the take coming in on OMCs. Rakesh, just to get a sense from you on the kind of liquidity picture you anticipate going ahead, as Avan mentioned, we were tracking DHFL this morning. I don't want to ask you on any specific news trigger, but there have been murmurs or concerns in the market with regard to the liquidity squeeze and how it may shape up over the next few months. Is that something that you're also keeping in mind?
Yeah, definitely. This is the biggest question investors have on their mind, and what government will do once we have the government. Also, there are a lot of talk about RBI opening a special window, which while RBI is denied, but the industry body is requesting RBI to consider. So there has to be some action to really ease liquidity for NBFCs, because the trickle-down effect is far greater. NBFCs service small businesses, and lack of liquidity is really going to pinch the common man. So I think the new government has a task at its hand, and I think that is one of the foremost thing we are watching for, to see some signs of what action government can take.
Rakesh, thanks much for joining in and sharing with us your outlook on the markets.